Hi, I'm Richard Murphy, and this is the 12th in the video series on the importance of tax transparency that I am hosting, and which is being made jointly by the University of Sheffield, where I work as Professor of Accounting Practice, the Global Initiative for Fiscal Transparency, and the International Budget Partnership. In this video, we're building on the discussion in video 11 on the taxation of the informal sector. Whilst taxing the informal sector has become a popular policy idea, it presents unique challenges and unintended consequences, particularly for equity, fairness, and taxpayer engagement. In this video, we'll explore the key challenges and possible ways forward. In doing so, I'm drawing on my colleagues from the International Centre for Tax and Development, who have extensive experience on this issue, engaging with tax authorities and informal sector workers alike. The particular issues we are focusing on are the difficulties in taxpayer identification and registration, problems with presumptive taxation, and the more productive ways forward in rethinking the taxation of the informal economy with a way to improving both revenue and equity outcomes. Vanessa van der Bogaard, Research Fellow with the International Centre for Tax and Development and co-leader of the ICTD's Tax and Informality Research Programme, has this to say based on her extensive experience on the topic of the taxation of the informal sector.
Revenue authorities around the world increasingly see the informal sector as a potential source of revenue and have made efforts to expand the tax net. This often starts first with an effort to identify and register informal operators. Our research, however, has shown that the common ways that revenue authorities try to capture informal businesses, including through mass registration campaigns, often prove disappointing in both revenue and equity terms. Importantly, they tend to target lower income but highly visible operators, often missing higher earners, including professionals and wholesalers. It's also important to recognize that registration does not equal tax payment. Registration without additional effort and cost in enforcement and following up with taxpayers can lead to a bloated tax registry without translating into meaningful tax contributions. A common way that governments try to tax the informal sector is through presumptive or simplified tax regimes, with informal businesses taxed based on simple proxies like type of business or location. While this can make things easier administratively, presumptive taxes are often regressive in practice, with lower income operators, often dominated by women, paying a higher proportion of their income in taxes than their higher earning counterparts. Many such systems have no minimum threshold, meaning that even those below the poverty line are eligible to pay and have tax rates that are insufficiently progressive when taking into consideration the very low incomes of the informal sector in many contexts, as well as high rates of inflation. The consequence, informal sector taxation through presumptive tax regimes is often not only inefficient from a revenue perspective, but also deeply inequitable, with the potential to undermine citizen trust in the tax system and their willingness to engage with it. Reforming informal sector taxation to target higher earners and create a more progressive system would improve both fairness and tax revenue. Yet this requires a rethink of current strategies, including moving away from a one-size-fits-all approach. So what can be done? Rethinking the taxation of the informal economy involves adopting a more nuanced approach that considers both the administrative challenges and the social context in which these businesses operate. First, tax authorities should prioritize higher income informal operators rather than focusing on small, low-income businesses. Different strategies to improve the targeting of efforts to tax the informal sector include working with third-party data and professional associations, though more research is needed to test the effectiveness of different targeting approaches. Second, and at the very least, we need to improve the design of presumptive tax systems. Minimum tax thresholds should be included, while tax rates should be aligned with actual earnings and regularly adjusted to account for inflation and economic conditions. Lastly, increasing transparency and trust between tax authorities and informal workers is crucial. Much more is needed to build trust with informal sector operators, including through grounded dialogue, and ensuring that tax contributions are met with tangible benefits like public services and social protection.
Another key area to consider when thinking about taxing the informal sector is the impact not just on income equity, but also on gender equity. The ICDT has further ample research on gender and taxation, with a particular focus on the gendered impacts of taxing the informal sector. Dalia Kangave, Associate Research Fellow with the ICTD, highlights particular points to keep in mind when thinking about the impact of tax in the informal sector on gender equity.
Another reason why it's important to rethink the taxation of the informal sector is because of its impact on gender equity. In many countries, women make up a significant proportion of those who work in the informal sector, either because of the low income or because of the precarious nature of the jobs that they do. So any efforts that go towards taxing the informal sector invariably have a disproportionate burden on women. If we use the example of market traders, in many countries, market traders are predominantly women, and market rates are normally flat rates, which makes them inherently regressive. Women often end up suffering a higher burden than men because they have less capital, and so most of the goods that they sell give them less profits, and yet they're paying the same flat rate. At the same time, market traders are quite visible. And so in terms of enforcement, you find that market traders face a disproportionate burden when compared to other sectors. Similarly, the regressive nature of presumptive taxes means that those at the lowest end of the income earning spectrum, majority of whom are women, end up bearing a disproportionate burden of presumptive taxes. There are also other taxes, formal taxes at the subnational level. You have examples of things like license fees. And depending on the country, like research shows that trade licensing fees, which are paid to subnational governments, sometimes depend on things such as the location of the business and the kind of trade that you're doing. They don't really depend on the size. Again, here we see women being disproportionately affected because women normally have smaller size businesses, but yet end up paying the same rate of tax as the bigger businesses, which are predominantly male-owned. On top of formal taxes, informal traders in many contexts often face a number of informal taxes and bribes in order for them to operate in public spaces and in markets. Examples of these include things such as toilet fees, security fees, and payments that they make to associations that they're part of. When you combine those various payments with things such as harassment and gender-based violence at the hands of tax collectors, it makes it really difficult for women to thrive in their businesses and to grow their businesses. In order to address the gendered impacts of tax in the informal sector, we need to take a more inclusive approach, both of tax policy and tax administration, one that looks at the unique challenges that are faced by women in operating in the informal sector, and also one that looks at the way in which these women interact with tax officials.
In summary, while common approaches to taxing the informal sector often lead to disappointing outcomes in terms of revenue, equity, gender equity, and taxpayer relations, this is an area where further research and engagement with both revenue authorities and informal sector operators can lead to more positive outcomes. By adopting a more targeted and progressive approach to taxing the informal sector, the fairness and efficiency of the overall tax system can improve.